Hello, this is Mike with NetPicks.com and the Options Mastery Program. So this is the weekly recap for our Options Mastery Program. Today is Saturday, October 3rd. So pretty interesting week last week. We were very active. We had a number of trades on the watch list that we look at, that I look at personally. We'll walk through some of those trades in just a second. I also want to take a few minutes to talk about the market as a whole, take a look at some key levels that I'll be watching heading into next week. And I think it's very crucial to do that here this weekend because of what happened yesterday to end the week. Friday's session was probably one of the most interesting sessions that I can remember. I've been trading a long time, going back to 2002, and I don't remember too many sessions like what we saw yesterday. So the reason it was so interesting, we had the big monthly employment number come out yesterday before the market opened. The employment report comes out the first Friday of the month, and it's a very important report because the Fed looks at it so closely. Everybody's focus is on the Fed these days and what they're going to do with interest rates, how it's going to affect the markets. And once that report came out yesterday, it was a terrible number, and the market hated it. We saw a big sell-off. So because that report comes out pre-market, we were watching the futures, and the futures sold off immediately, and we saw a big gap to the downside. For the first 30 minutes of the session or so yesterday, we saw some back and forth, we saw some selling pressure, and then come 10 o'clock, a little after 10 o'clock, we saw a big reversal. And it was a pretty big reversal because for the rest of the day, it was basically a straight shot to the moon. We saw a lot of buy the dippers step in. Like we've seen the last couple of years. With that first half hour of the session, if you get a big gap to the downside, how many times have we seen it where people come in and buy the dip at 10 o'clock or closer to 11 o'clock, and then we zoom higher? So it was a combination yesterday. It was both the buy the dippers and it was also a massive short covering rally. The last number of weeks, we've seen a lot of people trying to position themselves for a big move to the downside. A lot of people were short the market. So the reversal yesterday was key for a number of reasons. When you start to get into a big market trend, in our case, we have seen some downside pressure over the past number of weeks. And a lot of people are talking about where's the bottom, where should we step in and buy and put some money to work. Well, what I've been talking about in previous videos, what I'm looking for is either a blow-off move to the downside where you just get a huge move to the downside on massive volume, on a pickup in volatility, or if you see a market open to the downside, not hold, and then we just zoom right back to the upside, and that reversal happens on bigger volume. You start to break some key resistance levels, and that's what we started to see to end the week. On SPX, we're looking at SPY here. This is the S&P 500 ETF. On the cash index on SPX, we did have had a 4-day winning streak last week. We have not had a 5-day winning streak all year, I don't believe. Okay, so it looks like we're poised to break that streak heading in next week, because you look at this chart, Friday did a number of things for us. Number one, earlier in the week, we tested this support level that we talked about last weekend. Heading into the weekend, I did one of these videos and we talked about some key support levels, and I mentioned that this level right here, this little swing level right around that 186.80 level, 186.75, that level held as support, and we did bounce higher. So then I mentioned if we did move higher, we have all of these moving averages up above us that will act as areas of resistance. Well, we did test some of those to end the week, and notice where we closed. Zoom in here a little bit so you can see it a little bit clearer. We did close just above the 20-period simple moving average as well as the 20-period exponential moving average. That's a pretty key level to look at heading into next week. So, we did start to break the downtrend. We're moving back to the upside. If you want to get picky, if you want to nitpick this move from last week, I would like to see it on bigger volume, but the volume was decent. We'll put it that way. So next level's up above us. Like we always talk about on these index ETFs, I always look at the 0.50s and the 0.00s. So if we start talking about 195.50, 196, 196.50, and even though there's not moving averages there's not swing highs or swing lows, those do tend to be areas where traders look at for support and resistance. So we'll watch those closely. We also have this level, this horizontal line that I marked here right up around the 198. It feels like that's where we're headed next. Not saying it's going to happen immediately right next week, but I think this move to the upside is poised to head up there and potentially even test those 50 period moving averages up above us at 198.85 and just above the 200 level. So those are some things that I'll be watching into next week. If we do flip back to the downside, like I mentioned, I mean, I would really be surprised if we broke all these moving averages on the upside without a test of those August lows. I'm still looking for that. Okay, I mean, after the end to the week, I mean, that looks like a long shot at this point, but I don't believe the lows are in for the year yet. Okay, I'm going to stick to that stance here heading into the next couple weeks. And we've got a big test here the next couple weeks because earnings season kicks into high gear. Okay, so as we head into mid-October, a lot of the big names, a lot of the market leaders, Apple, Amazon, Google, a lot of those big names, Netflix, they're going to release earnings, and the market's going to take its cue from those reports. Not expecting great reports, but we'll see what happens. And so everything that we just talked through on SPY, it really holds true for the other index products as well. This is QQQ. This is the NASDAQ. We've got this whole cluster of moving averages up above us. We've talked about these in the last couple of videos. So we've got our work cut out for us. The bulls are going to have to, really get through those levels on some decent volume. So definitely going to be a challenge to start the week, but again, any type of good earnings release out of one of those big market leaders and we could bust up through those levels. So I'm looking at, we stalled out right on top of those 20 period moving averages right at 104 yesterday afternoon. We've got 105.50 on up to 106.75. We've got a number of moving averages right there as resistance. Down below us, we do have that swing level right at 98.75. That's below us. That'll be the first area if this thing does flip back to the downside next week. That's the first area I will look at. And then all the way down to those August lows, if we do get some weakness to kick in, I'll be looking at the 0.50s and the 0.00s like we talked about over on SPY. Finally on the Dow, okay, you'll see that some of these support levels that we talked about, they did hold early in the week last week, and we bounced right off those levels, and to close the week, very, very strong close like we talked about on SPY. Closed up above the 20 period moving averages. Okay, that's great to see if you're a bull, and now the next area is above us. Those 50 period simple and exponential moving averages right up around 167 on up to 167.50. Those will be areas that look to be tested here early next week. So all in all, very, very strong end of the week. And let me take a look. We don't take a look at these internals charts all that often, but I do want to show you some of the things that I saw yesterday. Some of you that follow our NetPicks trading blog, I did post a few articles here lately on some of the things that I look at intraday to gauge how strong the market is. For me as a trader, I don't have all day to look at the charts. I wish I did, but I've got other things to get to, so I can't sit there and watch every tick on the chart from opening to closing bell. So I use these internals charts quite a bit to gauge how strong or weak the market is. Okay, so I split the screen into 4 charts. I've got the up volume versus down volume ratio in the top left-hand corner. I've got the advanced decline line in the top right-hand corner. I've got the 15-minute tick chart down in the lower left-hand corner, and then I've got a 5-minute chart of the SPY in the lower right-hand corner. On that 5-minute chart of the SPY, I've just got a basic pivot point indicator. Those price levels marked by those dotted lines, those are the pivot points. And then the big indicator that I look at all the time, I post it on Twitter all the time, is that blue line moving across the chart, and that's what's known as the VWAP. That's the volume weighted average price. And it's a huge level that traders watch intraday, especially on some of these big ETFs. And oftentimes it acts as a magnet pulling price action back down towards it. There's a number of times last week on Twitter that I would point out, hey, we're extended from VWAP, look for it to be tested before the close. And we saw that play out a number of times last week. So the reason I wanted to point this out from Friday's session is the internals really were the tell. Okay, so when we came in, this is what I was talking about. You can see it. Let me zoom in a little bit closer here on this 5-minute chart. Nope, that didn't work. Let let me maximize this chart. There we go. So you can see the big gap to the downside right at the open. And then for the first half hour, we kind of bounced around here, like I mentioned earlier. We did try to rally up a couple times. We did get back down and test the lows. We basically tested the lows of the session 3 times in the first half hour to 45 minutes of the session. And that's when, once that level held for the 3rd time, that's when we zoom to the upside. And look at this chart the rest of the day. I mean, it was a straight shot to the moon without a single pause, really. I mean, did we get a couple of brief pullbacks in here? But there was no key levels broken, and it was pretty much a short covering rally the rest of the day. It's very unusual that you'll go from 10 a.m. to 4:15 when the SPY closes without a test of the VWAP, but that's exactly what we saw yesterday. That's a very unusual occurrence. When you see that happen, in this case on the upside, very, very strong market. It's really hard to fight that if we don't get a single pause. It's just a straight rally into the close, and we closed right at the high tick of the session. So just extremely strong price action, and the internals also told the story. Okay, so up in the up volume versus down volume, notice that we closed at 5.44 to 1 positive. Okay, you can see that number right there in the corner. What that's telling me is that there's more volume going into the stocks that are positive on the session versus volume that's going into the stocks that are down on the session. When you start to see that, there's more activity on the upside. There's going to be more buying pressure. What I look for on the upside, I want to see 2 to 1 positive here on this reading. When you get at least 2 to 1 positive, that's pretty indicative of a trending day to the upside. It's very hard to get that to turn if we're at a reading of 5.44 to 1 positive. On the downside, if it's negative 2 to 1 or worse, that's typically going to give you a trending day to the downside. Not saying we can't turn from those strong levels, but when you get internals that strong and they don't move pretty much all day, it's pretty much telling you it's going to be a trending day. On the advanced decline line, we closed at plus 15, almost plus 1600. That's basically telling us that there is strong buying across the board. Okay, it's telling you how many names are advancing on the day versus how many names are declining on the day. So when you see a plus 1600 reading, that's just telling you that the buying is not limited to a couple of names. It's pretty much broad-based, across the board. That's a very strong market. Okay, anything over 1,000 is typically a reading that you're going to see on a trend day. When you start to get up past plus 1,500, that's telling you that it's going to be a pretty strong trending day. It's going to be hard for the market to turn when there's broad-based selling and you've got names positive across the board. Very difficult to get that to turn. Now on the tick reading in the lower left-hand corner, I've got all these levels marked. I've got the 0 line, plus and minus 400, plus and minus 800, and plus and minus 1,000. What I'm looking for is the extremes, plus or minus 1,000. When you start to get those readings, that's typically telling you that in the near term, you're at an extreme. And it may be getting a little overdone. Look at what happened yesterday. To close the day, we had 4 consecutive 15-minute candles that closed with plus 1,000 readings on the tick. Okay, basically that tick reading is changing throughout the day, and it's telling you at that given point in time how many stocks are trading on an uptick and how many stocks are trading on a downtick. When you start to get plus 1,000 readings here, again, that's telling you that there's strong buying across the board. In yesterday's session alone, look at all these readings. Look at all these plus 1,000 tick readings. Okay, from 11 o'clock on, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 candles there with plus 1,000 tick readings. Okay, that's typically a number that you'll see maybe for an entire week or two. To see all those plus 1,000 tick readings in one session, that is a very unusual occurrence. When you see that, you have to respect that. As much as I wanted to go ahead and I wanted to play a pullback yesterday intraday and try to play a scalp, I wasn't going to fight those strong internals. Okay, that's just you're going to fight an uphill battle there, and that's not a battle you're going to win very often. So I wanted to point that out. These internals can be very valuable. Instead of just coming in and seeing how many points the Dow is up on the day, or the NASDAQ is up on the day, or the S&P, these internals can tell you how strong things are under the hood. So it's very important for me to watch these, because I only come in a couple of times a day to look at the charts, and it can really give me a better overall glimpse of where the market has been while I was away from the screen. So very, very strong day. I just thought it was, from somebody that watches these things all day, every day, I wanted to point this out because it's just such an unusual occurrence that we saw here to close the week. So in one of the earlier videos last week, I did walk through a couple of trades that we had taken, that we had closed out. So if you missed that video, you can definitely go back and review it. But we talked about a lot of really nice winners with some nice put spreads. We talked about a 40% winner on Google. We talked about a really nice trade, a 70% winner on Amazon, another 50% winner on Tesla. I mean, we had a lot of really nice trades earlier in the week. The rally into the close of the week gave us some really nice movement to the upside. So let's talk through some of those moves and some of the trades that we did close out. Let me go ahead, and I'm just going to, I don't want to keep you too long here today, but I do want to show you some of the things that we did and some of the things that we're looking at here heading into next week. So here's Goldman Sachs. Okay, so this is a trade that we were looking at earlier in the week. We talked about this one during last weekend's recap video. And we talked about looking at some of these potential setups that we're printing heading into this week. The financials, that's a sector that we look at very closely because it's very difficult for the market to make a move without participation of the financials. So if the financials are all strong, it's going to be difficult for the market to head lower, and vice versa. So early in the week last week, to open up the week, we did see some selling pressure. The financials were very weak, and we did get this move to the downside. We played this short trade. You can see my entry point here, the first series of dots, my two target levels down below, my stop up above, and then as we started to hit target levels, my stop moved down to break even, and very, very clear cut where we were getting in and out of this trade. So what we did, the way that I played it last week, is I went into the October monthlies, the put options, and I bought the 177.5 put. I paid just over $600 for that contract. So for $600, I'm playing, I have control of 100 shares to the downside on Goldman Sachs. Now, this was just a great trade because, number one, notice we got in on a Monday and we're out the very next day. So we're in this trade for 24 hours or less, even less than that actually. So when we get those quick moves, it can lead to very large percentage returns. And especially on the moves to the downside, when you start to get that type of a move to the downside very quickly, you also tend to see volatility expand quickly. And that also helped give me a really nice return on the put option. So on Goldman Sachs, I ended up selling out of that put option. I booked a $570 profit. Okay, so that was a 93% return. I mean, that made my week right there. If you're only trading one contract, you're booking almost $600 of profit in less than 24 hours. Okay, you start taking multiple contracts. I mean, you sit there right there, and come Tuesday morning when you close that trade out, for people trading multiple contracts, I mean, book your profit and take the rest of the week, right? I mean, just a really nice return. Once we closed out of that trade at second target, there was no trailing on that trade. There's no waiting for the bigger move. As soon as I hit that second target here, I'm out of the trade. And for much of the rest of the week, from Tuesday on to, Friday, midday, there really wasn't much for us to do on Goldman Sachs. We did settle into a range and we got a little choppy. So once we close out of that winner on Tuesday morning, nothing for us to do the rest of the week until we got into Friday afternoon, and we did get this long setup. So let me get my data box up. You can see that we did get the long entry point right up above 176. I had my entry point at 177.25. I made an adjustment. Let me pull that data box over so you can see it. Inside of that data box, notice where it says L entry. That's my long entry point, and it says 176.99. I don't like to get in on a long setup right in front of a 0-0 level. We talk about that all the time, those key levels. So I pushed the entry point up, so I did not grab the trade. I'm not in this trade yet. I will look at it Monday morning to see, I'm hoping that we don't get a big gap to the upside, because I still would really like to take this trade if we get up to 177.25. If we hit that level, I can either look at a long call, I can look at a long call spread. Regardless of how I play it, I know exactly where my targets are at and my stop is at heading into next week. 180.64 and 182.66 are the targets. 171.32 is the stop. So all in all, nice week. We only took one trade on Goldman Sachs, but it was a game changer. I mean, it was a really nice trade, really profitable week there on Goldman Sachs. SPY, we talk about the index products. Go ahead and zoom in there. Okay. So early in the week, this is another one that we talked about in last weekend's video. We had this move to the downside that was setting up for us. We did end up taking the trade on Monday, and we were already out of the trade come Tuesday morning. So much like Goldman Sachs, we got that brief selling early in the week last week, and we took advantage. So on SPY, I went ahead and I bought the October 192.5 put. And it's this trade right here that I'm circling. So you can see the entry point there. You can see our target down there. I did get into the October 192.5 put. I'm just checking my price here. Got in for $4.35. So for $435 per contract, I'm controlling 100 shares of SPY. Okay, we ended up getting out of that trade. We booked a really nice profit, $260 of profit per contract. That's a 60% return in 24 hours. So you start to look at early last week. I mean, we had Goldman Sachs, we had SPY. I mean, you start closing out of these trades. I mean, why even trade the rest of the week, right? I mean, just a phenomenal, profitable start to the week. Now, I ended up trading the rest of the week, and it did pay off. But the argument definitely could be made when you start to see a stretch like that to start the week to book the profits and run, right? So to end the week, we did get this long setup. Notice that we had our long entry point 190.197. I did push that up to 192.10. Again, just adjusting around the 0.0 level. So we did get into this trade. You had multiple opportunities. You had opportunity number 1 here, opportunity number 2 there, opportunity number 3 here. So there was multiple chances to get on board this trade. Even if you missed it initially, just market threw us a bone and gave us the opportunity to get in late if you needed to. Now, if you did get in early here, or the first 2 times that it triggered in, notice we did have to survive some heat, and we got within a few pennies of the stop down here. That's why it's so important to have a system in place that gives you exact entry points, targets, and stops. Because if I don't have this system telling me where my exact stop is at here, once this trade starts to work against me, once we see that big gap to the downside Friday morning, I'm probably getting out. I'm probably panicking, right? But because the system gave me that stop, we did not hit the stop Friday morning. We came within a few pennies, but we never got there. It allowed me to stay in long enough to, we profited the rest of the day Friday. We hit first target, stop moved to break even. As we started to approach second target, we haven't hit that yet at 195.85, but notice we have a trailing stop in place now. I'm starting to trail our signal line, which is that dashed yellow line. So worst case scenario, if we come in early next week, and this trade turns around on us, we're getting out with a small profit. I mean, that's just a great way to set yourself up for the week. Okay, if we get a move to the upside to open the week next week, I'm booking my full profit, and we could be off to a great start just like we were this past week. So really nice position to be in heading into next week with a profitable trade going. Just hasn't closed out yet on SPY. TLT, this is another one that we did get this move to the upside, and this was another one that we talked about over the weekend. We missed it last weekend. We talked about this trade to the upside because we missed it initially. We saw the gap past the entry point. Okay, this is late last week. We saw a gap to the upside, and it gapped past this entry here. So I had to wait for price action to pull back. It did into last week, and then when we came in Monday morning, we saw this move to the upside, and it gave me a chance right in here on this candle. We again hit our entry point. So I jumped in early in the week. Okay, now this one, we basically had to stay in the long trade for most of the week. Okay, in fact, the entire week, because we came in Friday morning. Equities, we already talked about it to end the week. Equities opened lower after the big employment number came out. We saw the big gap to the downside. When that happened in equities, bonds did the opposite. They saw the big gap to the upside. So we actually gapped up past our second target here. Okay, Doesn't happen all the time, but we actually booked a larger winner than expected because we gapped open past a second target. Really, really nice trade there on a long call position on TLT. Okay, so really, really great trade there. We're talking about and I had a couple of different types of trades on here, long calls and a long call spread. I mean, we're talking between 70 and 90% return there on our long position there on TLT. Now, I'm showing you a lot of these winning trades, but again, for those of you that have watched the videos in the past, these are not the trades that I'm just going through my list and picking the best winners to show you. These are names that I trade week in and week out. I trade SPY, TLT, I trade Goldman Sachs. I trade them every day of every week. Okay, so I'm not cherry picking here. These are just the same names that you're going to see every time that I record a video here. Citigroup, I know I got to keep moving here. I know I got to move fast. I don't want to take up all your entire weekend here. So on Citigroup, I had the short trade, hit the first target. We basically held this trade all week. We didn't get the move to the downside that we got on Goldman Sachs. So unfortunately on this short trade, I can zoom out, maybe a little bit easier to see, we ended up getting taken out at break even. And that was on Friday with the big rally. So no harm done. We were able to reduce the risk. It was unfortunate that we just missed out on full target. And now heading into next week, you can see our long entry point at 50.21. So we'll be looking for further strength heading into next week. So a few additional open positions. Google, we talked about a Google trade early in the week. Last week in one of the earlier videos, we talked about a 40% return on a put spread. Well, we had this call spread later in the week. So let me zoom out. You can see the short trade that we caught late last week into early this week. We booked that really nice winner. And then we were flat for a couple days. And then we got active again on Thursday. And we had this long trade that did trigger us in. Okay, so really nice trade. It took us, Thursday was a choppy session. We were back and forth. And then Friday, I mean, we all know what the market did. I mean, you can see the numbers over here. We had a very strong day. So heading into next week, my stop is now with a trailing stop. I'm trailing the signal line here. 642.77 is that stop to start the week. My full target's up at 660.58. So I have a really nice winning trade going here on a call spread on Google. So we'll see if we can book some profit there early next week. So we're set up really nicely. I mean, we've got some open trades going on SPY and Google. Another one that we have opened, QQQ. This is one that triggered us in. We were quiet for most of the week. I mean, we did get taken out late last week at a break-even trade on the short position. We didn't get into another trade here until Friday. Got into a long setup and it immediately jumped on us and went all the way up to first target before the close. So heading into next week, we've got a winning trade open on QQQ. Stops at break even. Okay, the stop's at 102.40. So really nice trade. Full target's up at 105.19. If we get one more push to the upside to open the week, we could be booking profit there on QQQ. So just a really nice stretch for us here. Amazon, this is another one that let me zoom into the chart here. You can see that we did close out of a nice winning trade. We talked about this in last week's video. We had this move going to the downside. We booked a really nice winner. It was 60% winner on the downside here on a put spread. We then got whipped around a little bit. We did trigger into this trade on Tuesday. That ended up being a losing trade. Okay, so again, I'm going to show you winners. I'm going to show you losers. We did take a loser. It was about a 40% loser on a put spread here when the market started to turn on Tuesday into Wednesday. To end the week, we ended up getting into a call spread. Okay, we got triggered long above the 525 level. So now we got targets at 538.06, 544.83, stop at 508.10. So heading into next week, we've got a long trade on. It's in a little bit of a profit so far. And we'll see if we get some follow through to the upside. So all in all, last week, full winner on the downside. We had our second trade was a loser, and now we have our third trade of the week, which is still going heading into next week with a partial winner so far. All right, let me zoom into a few more of these, and then we'll and then we'll wrap it up here for the week. American Airlines, we haven't talked about this one much. We haven't been super active on this one. That's why I haven't had much to talk about in the last couple of videos. We did get taken out of this one on Thursday. We had this move to the downside going. We hit first target. We got halfway in between our first and second target, and we ended up getting taken out with a partial profit. So, not the move I was looking for. Didn't quite get the follow through that I wanted, but we did book a really nice partial profit there on American Airlines, and now we're flat. Nothing setting up for early next week there. Finally, let's talk about IBB. This is not a name I talk about either. This is the biotech ETF. It's not a name that we haven't had much to talk about here the last week because we haven't been in any trades. We did trigger into this long trade on Thursday. This one did get wiggled out, unfortunately, with the gap on Friday. The initial weakness on Friday morning caused us to get out with a partial profit. So I guess, I can't be picky. I mean, I can't complain about booking profits, but it was unfortunate because we all know what the market did the rest of the day on Friday. And if I was able to hold on a little bit longer, I would have been able to book the full profit. But can't complain. Really nice trade there on IBB. So a lot of profits booked last week. I haven't even talked about, we have a whole nother list of trades that we have going that are short premium trades. We sold a lot of put spreads and we sold some iron condors. I'm going to record a video early next week recapping some of those trades. So it's just been a really profitable stretch for us. It's been a tricky market because we've seen such big swings back and forth. But if you've got a system in place that's telling you exactly where to get in and where to get out, it's so much easier to navigate these tricky markets. So heading into next week, I anticipate the activity to continue. We'll see if the bulls, breaking these key resistance levels on the upside, we'll see if that leads to some follow through. For the sake of our long trades that we just walked through, the ones that are still going heading into next week, I'm hoping for one more push to the upside, but we'll see what plays out. So I'll be back early next week. We'll review some of these trades that we just talked through and see what the market gives us. So enjoy the rest of your weekend, and I look forward to talking with you guys here early next week.